Good morning. Wednesday, the 10th of September, 2025. This is my virtual trading journal, risk neutral trading. Welcome. The idea here is that I capture everything I'm interested in trading wise on the okay, everything seems to be all right. Capture everything that I'm interested in trading on my screens, and then my voiceover provides insight as to what I was thinking. Saves me from screen snapping and typing and doing all the journal things, which would be required otherwise, and I believe that a journal is really important, so here we go. First of all, there's no financial or trade advice here. And there's a description, or there's a disclaimer in the description of this stream. I stream every day starting at 8 o'clock in the morning, every trading day. RTH trading day, in other words, Monday through Friday, every day, and with this pre-market and analysis of the overnight, etc., and then a setup of everything on my screens. And I'm going to sneeze, stand by. Sorry about that. All right, so the idea then is that I will have complete transparency and accountability because the entire trading day from now, 8 o'clock in the morning, through 1500, which is the cash close, is captured in the stream. Makes for a long day, 7 hours plus, standing here at these stand-up desks, but I think it's worth it for the accountability and the transparency. I have a commitment to not take any trades off of the stream on the account, so there you go. And again, this is my virtual trading journal, and I allow anybody to just look over my shoulder and see everything that I do and hear what I'm thinking. And hopefully it could be of some use or help or entertainment or funny or whatever else it is. All right, let's jump right on into the numbers here. I'm not monetized for this in any way, so likes and subs would be great. And definitely drop something in the chat to communicate where you are, what language, whatever it is. And I stream in 1440p, so if it's not real clear on your end, then you can click the gear button in YouTube. The reason I stream to YouTube is so that I can review the streams on any device, and it further adds to the transparency and the accountability here. So this is not a rear view mirror trading influencer BS. This is live futures. Primarily, they focused on the ES, which is the mini S&P. All right, numbers. All reports. Well, what do we have out this morning? We had PPI, and you can see the results. You can see what happened right here with PPI. I'm a little apprehensive about that number, but let's take a look at the. Here we have financial juice. Now this is the free version, and I do free with both of my news reporting session applications. Figuring that would be helpful. This is my old standby, which is investing.com. I find that it presents the numbers clearly, concisely, not confusing, easy to screen snap and share. And there's the core PPI and the PPI for August. And I don't really believe these numbers, and I'll tell you why in a minute. And then here we have financial juice, which is also free, but it's a bit more confusing. Excuse me, gee whiz. And this is kind of the docket, similar to investing.com. Then there's more of a live squawk feature over here on the right. We don't have any other. We do too. 10:30 Trump receives an intelligence briefing. Wow. How is that news? I don't get it. I mean, that's top secret. Why would that be a news event? I don't understand that, to be honest with you. But good that they, put it in there. Apparently he'll have some remarks is why it would be there in this news feed. And obviously, which should be, really apparent to anybody in the sound of my voice, that anytime anybody, or at least a few select folks in the current administration, get near a microphone or a camera, there can be a disruption to the auction and the market. So that I consider that a random risk event, and I keep my eyes open for those. And I think you should too. It's nothing to do with politics. It's got to do with reality. Anytime that he says something or posts something, it can have a big effect on the market. So we are traders of the market, and we should be, the most important criteria or mission that we have is to control our risk and preserve our account. So anytime something could happen that would endanger that or affect that, then we need to know about it. And it's got nothing to do with what color ball hat you wear. Okay, let's move on to, now it's basically the news for the day. PPI was out. This is the investing.com, or Investor RT, which is my basic charting package. This is the ES Mini. This whole chart are the ES Mini, the NQ Mini, then this is the ES Mini Micro Composite, or my high volume chart, or high time frame chart, and my ES market profile chart. I also plot the same configuration in Mini, in the micros here. Look at how look how different the micros look. This big consolidation up here compared to over here. Look at that. Isn't that strange? Wow. You should never just assume that micros are going to trade the same levels, the same volume, the same numbers as do the minis. So there's just that. Anyway, this is our overnight. So first thing that you need to watch is, or be aware of, here's the close of the previous RTH session. And here we are. So we are going to be in a gap up situation today unless something dramatic happens in the meantime. Typically, just think about what you would do if you had traded overnight and you were way up here and you had all this profit in, continuation from yesterday, which is pretty normal. Here's yesterday's RTH into the close. And typically when we close up here at the highs like that, we continue on, and we did in the overnight. Now, what would you do when we open? Well, most people and I would expect responsive selling to take profit. So unless there's some dramatic move below this little distribution, which has occurred because of the PPI number, I would suspect that we would have some responsive selling to take profit. This is the NQ, which is exactly similar. Here was yesterday's RTH Open, close, continue higher, and now what are we going to do? This is my micro composite chart, which is a higher time frame. This is, excuse me. First of all, and this is for the ES Mini. First of all, very simple. It's a RTH chart. RTH, which is regular trading hour session. There are two sessions. There's the ETH, which is the overnight, and the RTH, okay? Then we have daily candlesticks. So this is a daily chart of the ES and for the day trading session, the RTH trading session only. Wherever price overlaps, I draw a volume profile around it. That volume profile, by design, generates a high and low volume node areas, which are indicated here by these red and green lines. And it also generates a micro composite VPOC. which I transfer to Bookmap. The red and green lines push automatically. The rest of the levels and stuff I transfer myself. Let's see what the POCs or the naked volume points of control are. So here are the naked volume points of control for these various levels in the micro composite, which hopefully I have noted properly on my Bookmap. And again, this is the market profile, market profile chart. Well, I don't know what's going on. Let me have a drink of tea. So the session prices here are also pushed automatically to Bookmap. You can see the export up here. Now this is our, I'm going to change the crude contract. That's what I was getting ready to roll that. I realized it was time for the stream to start. Here's our volume. We're at 176,000 contracts since 1700 last night when the Globex session started. Globex is a full session, ETH and RTH every day. Here we have everything. It's green because the last price here is above settlement. That's all that indicates. But that's a huge psychological thing that they worked out as a trick. Not a trick, but I don't know what you call it, market manipulation tool years and years ago. All of the many of the retail traders, all these Robinhood people and all that kind of thing, their little platforms will turn green or red based on this up here. And when that happens, there's a huge number of them that sell or go long, short or long. It's pretty amazing, but that's the case. And it's only based on this very simple metric. The last price as it compares to the settlement price. All right. Now let's jump over to the Bookmap, which is my primary trading tool. This is the micro composite column where I enter the, you'll see here with the, this is the previous, or the micro composite all-time high for the ES, and it was put in on the 25th of August in the RTH session, and we have now taken that out with a new all-time high in the ETH, which I can assure you they hate. These RTH guys hate any records or levels to be held for very long by the ETH session, so this is suspect. Be careful. This is the dome, of course. There's a POC, you know, the micro, the other POC levels are down here. These are the high and low volume nodes. And this is the volume profile for the full session starting last night at 1700. You see how thin this is? And light the volume is, and how small the range is? That represents here. And here, This is the RTH session volume profile, which started, we'll reset this morning at 8:30. And here we have the notes column, which is real important to me. And let's start by, you see this statistics associated with the various price levels from yesterday and the micro composite VPOCs that I've entered through the day. But these statistics are entered before the market opens every day and not changed. Now let's start by clearing these contracts or these notes. There we go. And the next thing we're going to do is change the title of this column to the suspected open type. And what do I think that's going to be? Well, there are only two criteria. Number one, if we opened right here, right now, how would this open relate to the previous close? Well, here's the previous close. So we would be higher than the previous close. How does this open relate to the previous range? Here's the previous high. We're above that. So we would be higher out of range. Gap up. I'm tired of gaps, man. Higher out of range. That is the open type that I suspect will happen. And what does that do? Well, it dictates the statistics we will use associated with the various price levels. And it's gap up. It tells you what the theme and the feeling and the momentum in the market could be. It suggests that. Let me rephrase that. These are the session prices, which are pushed directly from IRT to Bookmap, and they are all straightforward, no mysterious. You don't have to wear a big, tall, pointy hat or have a magic wand to understand any of this stuff. Nothing I do, I should say everything I do, is based on data, probability, and statistics. That's it. There's no indicators on my Bookmap or my IRT charting. And let's run through the levels. We have a POC for the full session, which is kind of this muted yellow. And we have a POC for the RTH session, which is the brighter yellow. The POC simply marks the price at which the most contracts have traded so far in the session. So far, at 1553.70 or 1554, we've traded 5,561 contracts in the overnight session so far. The minute one of these prices says 55.62, this yellow line is going to move there. That's all there's to it. Very simple. And similarly for the RTH session. Now, one thing I do here is at 59.5, the RTH POC, one thing that I need to do is mark this as a naked volume point of control. I'll tell you why I do that. That's for the 090925. That's the date. This is the naked volume point of control for the most recent RTH auction right there. That's where we closed yesterday. That was the location of the POC. Therefore, it is the location of the most recent naked VPOC for an RTH auction because we haven't had another one yet. Okay, so that's one of the likely one. We have a VWAP for both Globex and RTH. And you could argue that VWAP is an indicator because it is calculated. Shoot me. And we have the RTH mid. Other lines that could be a bit confusing are the IB high and low. Simply because of the name, the initial balance is an old market profile term. What these two levels actually represent are the high and the low of the first 1 hour of the RTH trading session. That's all there is to it. Now, high and low volume nodes, etc. Okay, and we have this gradations. You know, these various highlighted areas here in the heat map represent the resting liquidity in the book, in the dome. So that's it. That's it for the pricing. Now let's look at the statistics, which is always a hot topic and important. And that is now remember, we're going to open higher out of range, which is gap up, right? So over here is the statistics study, and there are only 4 open types: higher out of range, higher in range, lower in range, lower out of range, gap up, gap down. Yesterday we opened higher in range. There we are. IRT conveniently highlights the correct open type, but only after 8:30 in the morning. So that's from yesterday. Here is higher out of range, which is gap up. This is where we are. In a gap up situation, the study looks back at 2,000 days, 1,999. Call me a liar. Of these 2,000 days, we opened higher out of range 514 of them. Of the days where we opened higher out of range, price revisited the overnight volume point of control 413 times for 80.4%. Overnight volume point of control 80.4. Boom. Wasn't that easy? That's all there is to it. Now I'm going to go down the list. The next one in order of sequence is the overnight high, 77. And then we're going to look at the IB high and on and on and on. So 77.0. Overnight high, which we happen to know is right up here behind the developing value area high. So that's 77.4, wasn't it? 0.0. Okay. And then we have the overnight, or the IB high, which was 65.5. So that's great. Let's jump down here and go 65.5. And we need to do this, IB high. Why did I do the initials? Because the minute we open, this level is going to move. It's going to go up to flag the high of the current RTH session. It'll be up here somewhere. So it won't be down here anymore, and I'm going to wonder what 65.5 represented. Next, we have the previous high, which is 65.6, and that's right there. Overnight mid is 64.8. And so on and so on. Previous close and the overnight low is 68.9. Previous close is 47.5. Wow. I want to enter this something to prove a point, 58.9. The overnight, the IB low is 58.9. IB low. Now stop and think about it for a minute. How in the world are we going to get to 65.5 or 58.9 and not get through the previous close at 47.5 first? Well, obviously we can't. Therefore, you need to really recognize, that these are probabilities. They only represent the amount of time that these price levels were revisited in a higher out of range open configuration looking back over 2,000 days. It's a probability. It's a statistic. It's not a hard and fast anything. Okay? Now, there's that. And then we're going to have something else that I do every day. Which is put this snap in the deal here. Let me see what I'm doing here now. Okay. Now the what I'm doing here now is a snap. I put in a Bookmap Discord chat room called the Traders Lab. I don't recommend any other websites or anything because I am so over all of this internet guru, influencer, rearview mirror trading bullshit, or BS, sorry. But the Traders Lab, I feel like, is if you're interested in a chat room with a lot of people in it, the guy that's started it is named Tom B. He is a professional trader of 46-something years. He doesn't call trades. He doesn't trade live. He doesn't call trades, and he doesn't show his account or any of that kind of stuff. But I believe he's that he's telling the truth, and that he's the real deal. It's the only site that I do recommend. I don't recommend any of the other Bookmap Discord sites because the only other two that I have ever visited at all, the guy was typical influencer. Buy this on my website, do that, mentoring, blah, blah, blah. The reason I kind of suggest or offer the Traders Lab or a little support for the Traders Lab is it's completely free and you're never solicited for anything. So there you go. And I'm going to not spend any more time on that. I spend too much time and I get into my other stuff. So the next thing that's pretty important to do here with Bookmap and our world is to trade. And in order to trade with Bookmap, you have to activate the trade control panel by clicking this padlock button and select a way that you will interact with the application to trade with your mouse. If you choose chart, the only place you can trade with your mouse is the active data column. If you choose DOM, the only place you can trade with your mouse is the DOM columns. And both is, of course, both of those options. You can also trade with your keyboard hotkeys if you enable them, but you need to have the focus of the computer on the application in order for that to work, which is completely normal. Next, I trade with multi-brackets. This is the risk neutral methodology, and the name of the channel. The smallest risk neutral package you can use is 2 lots because you need to trade even numbers. 2 lots. Then you set one stop location in ticks for the entire package. Once you do that, the first risk neutral scale is automatic because it is for half of the package and for the same number of ticks positively as the stop is negative. The minute you achieve the first risk neutral target, the trade is risk neutral. The worst you can do is scratch. Then you have the runner. Now you can set the stop size. First thing you should look at is your account risk tolerance, and then the volatility of the day and any other parameters you use to, ATR, whatever it is you use to set your stops typically. But that's the first thing you should consider is your account risk parameters. You want to maximize. First, you want to limit the amount of time you expose your account to risk that you put on risk in the market, and maximize the number of potential losses in a row that it would, or wins in a row. Hold on a second. Minimize. Let me say this exactly so it's not confusing. You want to set your stop so that you can have the maximum number of losses in a row, which can happen in a random distribution, and not blow up your account. I hope that's, I don't think I said that very clearly. Sorry about that. And next thing I'm going to do here is turn on the multi-account trading. That is because this is a TopStep evaluation account with 4 others behind it. So every time there's a trade placed here, stop, win, whatever, win, lose, or draw, that exact outcome is replicated on 4 other accounts. My thinking here is to start this from 0 to hero. This is a completely transparent and a fully accountable record from 0 to hero here in this process through the evaluation, the XFA, and the live account. So there's that. After you have decided on your multi-bracket, I no longer need the rest of these options that you can use. Because I use multi-brackets, I don't set up my brackets or anything down here in the trade control panel. And these are the parameters that are available when you're in a trade. However, you'll notice that they're also replicated right up here. So I'm able to click this button again. The padlock stays open. I get the real estate back. I can see all the same in-trade parameters or metrics, and I have cancel all and close all. So I'm all good to go now at this point with the risk neutral 2-lot package in the ES. And we're going to open in a minute and a half. Wonderful. Wonderful. Here we go. Hook in and hang on, boys and girls. There's going to be some random risk around 10. We've already had our number out. Remember, I'm thinking that we would probably, if it were me, I would be looking for some to take some profit. So I would be looking for a responsive selling in the market at the open. That's just me. Okay, we're going to open in 30 seconds, and oh, it reset early now. It did reset on the 1 second thing. That's pretty weird. That isn't what I had in mind, but now it reset before the time frame. So how the hell did that happen? Okay, well, let's see what happens here. I don't think that's exactly a good idea, but okay. We'll start flagging our micro composite VPOCs. Let's see if we get our IB high and low aligning up here now. We've already taken out our overnight VPOC, huh? See that 80.4% probability has already come to pass, as has the overnight mid. It's pretty phenomenal how frequently that happens, actually. I'm not sure I like that, but anyway, it's better than it has been. For some reason, it all of a sudden, after years of working flawlessly, it has a problem resetting exactly on the open time, which I have set. I don't know what the problem is, but I can guarantee you it's freaking annoying, and we're gap up. So what does that mean? That means that we have the previous RTH high right here is the gap low. And I better get this set before the damn thing is already taken out. And this is a gap low. EL090925. And the gap high is the open, because that's how I do it. Now, gap rules say that I can't multitask, because I already said. Okay, gap rules are, if we close the gap relatively early in the session and are accepted in the previous day's pricing or range, there's a high probability we'll trade across the value area of the previous day. If we are rejected back out of value or range, there's a high probability we'll trade on in the direction of the gap. It's common sense. I mean, just think about that. Next thing I'm going to do is put in a little deal right up here, which is the RTH, and that's 090925 ETH. Oops, that's might as well use E5 ETH. And this one is RTH, and I'll make sure that's denoted over here. And we've been playing this leapfrog crap on the all-time highs for the last little while. Frustratingly. Now, you'll see that there's the IB low. So that's not very good. And there's the IB high, which is also not very good. So this thing is it's not accurately representing the volume area that I want it to represent by starting a little bit early, which is kind of weird. But anyway, I would have thought it more volume. But so you see that the IB flags have changed now, right? Oh, another thing I do that I almost forgot, new methodology here is to set this blue visual reference line at the session start. The idea is that as the day progresses, I want to keep the entire session in view in my chart through the bulk of the day until I'm anticipating interacting with the market trading, and then I can zoom in. That way there's no question in my mind about the context, right? And I also try to keep the price scale here at about 1 point to give me a sense of scale. So we traded down to here, and we have not closed the gap, which is right here, huh? Yet. Not very much responsive selling. So much for my prognostication here. You should never try to predict what the market's going to do. You should anticipate what the market is going to do. You can do that. And you should also only trade what you see. What's happening in front of you. Okay. Let's savvy. Now I'm going to try to reset this damn thing and see. It's pretty close now at the high and the high. And the low's a little bit off. We're traded down, balanced out, bottomed out a little, and now we're trading up, huh? Oh boy, don't you just love it when they put crack in the water cooler and these guys get all excited. Going to the moon, Alice. We're going to the moon. Welcome to the stream if you're new here or not. Throw something, thumbs up. Throw something in the chat, most importantly, to let me know who you are, where you are, what's going on, what you think, what to do, how to improve this or not. Now I'm going to see about the reset story. See if I can. What did I do? Well, I had it set on session start at 8:30, and it started before 8:30. I don't get it. Yeah, well, there's that, and there's that, and let's reset to that. I thought sure that was going to work. Why would the session start? You know what it seems to me to be? It seems like the clock in Bookmap is off. And my computer, I don't know. Let me think about that. Anyway, this is just anal bullshit. BS, you know. So what? As the day progresses, what am I going to know if I'm one tick off or not over here somewhere? But when you're using levels like the IBs and stuff, which I do to trade, and in fact, those are the levels that I am vetting now, the 2 IB trades. So the only trades I'm taking in the day are the IB trades, either the continuation or the failure, until I have the data to have vetted that trade. So that's important to me because I spend most of the day standing here watching. And that's is an exercise in patience. That's for sure. You see now how the IRT is exactly correct with the volume profile and the IB high and the IB low. But that is not translating properly to Bookmap, which has got the IB low down here, or the volume profile down here and the IB low up here. Irritating. Quite obviously, the IB low. To be honest with you, that's wrong. Here we are. Here's the IB low. That's obvious. There, look, we traded there in price. So that is the low. The flag is not representing correctly. Beats the hell out of me. The important or the interesting part is all of the data for the price session prices and for the, correspondingly these levels are the exact same data, and they are pushed from IRT to Bookmap. Cloud Notes. The smallest refresh time I can set is a minute. The indicator over here, whoever coded it, it is more frequent than 1 minute. So sometimes the line gets off sync with the flag, but that's completely no problem. But the fact that the flag and the line are not lining up with the low of the day, which is right here, is a problem for me. 65.43.75 should be the low. I'm sorry. Is that right? Yep. And that's not the low over here. So what I'm going to do now is download the data. And you just do that. And now all of a sudden it's going to download from DTNIQ feed and replace all the data. And then pretty soon this will go around the horn and update everything, and we'll see what happens here. Yeah, this is the low is 44.5. There we go, 43.75. See that? Changed when it did the download in progress. So there we go. So now this flag will change down here to 43.75. And everybody's happy. Okie dokie. Talk about nit nat anal. Who cares crap, right? I don't guess it's too, I don't guess that's too critical or important, but you see how it changes. That's how Bookmap or IRT operates. See it updating all the different charts. Okay. So now, what have we got going on here? I'm going to try to do this too, I think. I'll wait for this thing to get its shit together a little bit. All right. Back to the map of books. So we've got this lined up correctly, this lined up correctly. So now everybody's on, on the same page. What I'm going to do, I think, is have my computer clock synced to Rhythmic, which you can do a setting within Rhythmic because that's who drives this data. And that's what I care about, is the market time. I don't give a crap what time it is in Houston, Texas. Really, but the minute one way or the other, who cares? It did reset automatically, though, which has been a big problem. So I may leave it that way. I may revert it back to the session start. That seems to be better than not. The reason I was saying that the reason I interpreted that to be ahead of the market session open was I was looking at the clock, right? So I'm basing it on invalid information. Even though I have the special task set up in this computer to resync the clock with the time server. I think it's in Boulder, is the closest one. Every day at 7 o'clock in the morning. But that doesn't affect Bookmap because I restart Bookmap every evening at 1700 when the new session opens to capture the entire session and get the recording for that and watch the market. And it will run through 1600 today when I will shut it off. I've got the full ETH, RTH sessions recorded and stored here back a couple of 3 years or something. Okay, where the hell am I? Who's on third? I don't know. So what have we done? Well, we've taken out the mid. We've taken out the VPOC, or here's the RVPOC. Oh, bad Billy, I'm not getting my things and migrating VPOCs and I'll be right back. All right. Now, I hope to God we don't have a similar situation to yesterday where we just had a real tight, blender sports day when we just made a big pot of retail soup, just chopping them up. We've had this gap up, no apparent inclination to close that gap yet. How high can they go, right? New all-time high. So I closed off a 401k yesterday, and I should have waited till today, I guess. It's just too spooky to have someone else be in complete control like that. I couldn't deal with that anymore. So let's see, where the heck are we now? We've talked about the gap rules. We have opened. That's very definitely happened. Trying to get up to speed with all of my my timestamps and chapters and things here. And they're pushing that envelope higher, so they are not, no real indication that anybody is concerned about taking profits. Now, let me say that you should very definitely recognize this is a blackout week for the Fed. The all-important, oh, Jesus, everybody, come to Jesus moment for the Federal Reserve and rate cuts. That decision is next week, the 17th. Next week is also The next week is also the triple witching. It used to be quad witching, but we don't do options on something. I forget. I'm not an options trader, so I forget which one it is that they dropped. So it's only triple witching in the States. It's still quad witching in Europe. That is next week. That's always a big. So between the Fed rate decision and the options expiration, quad or triple witching, next week's going to be a rodeo, I guess. And hold on a minute here. Let's have a quick look at what the what the reporting numbers, et cetera, are going to be next week, which is the real nice benefit of fingernails like horse's hooves over here now. Yeah, let's take a quick spin through. Remember, this is Financial Juice, the schedule, which you can filter for your time zone, whatever, and then the Squawk Box, the kind of event or affair going on over here. My preference and my oldest go-to was always economicinvesting.com. Much cleaner to look at the report numbers in advance. We can see what earnings are quickly. Nothing to speak of. Let's get back to where I was going until I got off on that tangent. Come on. Let's look at next week. That's where we're going now. Ooh, baby. So we got Empire State Manufacturing on Monday. Tuesday, core retail sales, biggie. Industrial production. Retail inventories. And here we have the world famous, all important FOMC economic projection and interest rate decision at 1300 on Wednesday. So funny that building permits and housing starts take a back seat with only 2 stars, looking at the rate projection and the Fed rates. Then Thursday, we have initial jobless claims, the Philly Fed. And Friday, well, I don't have triple witching because this is stock stuff, not options, but we can Google it if you don't believe me. And I can assure you that I'm right. It is triple witching, or used to be quad witching. So there you are. These are both free, as I said. You can pay for them if you want to. Bunch of crap going on in Kathmandu and Kenya and everywhere else. I keep this one kind of going at this point because I'm looking for, we got wholesale inventories at 9 o'clock. Interesting. 7 minutes there. There you go. Why isn't that over here? Today's Wednesday. Why the hell is wholesale inventory not here? I'll mess with the filters later. You filter, I mean, there's a gazillion filters here, you know, countries and displays and employment and 2 and 3 stars, apply. I don't know why these are not selected. Let's try this, eh? Let's look at the whole shooting match. Let's get everybody. Now where's the save all thing at? Apply. There we go. You can see if you can filter for virtually everything. Still not there. Huh. Well, I'm puzzled. Oh, these guys are full of crap. I don't know. Wait a minute. Am I on the wrong day? September 10th? Nope. Wholesale inventories. Month over month. Well, there you are. This guy's really weird. And why? Yeah, well, anyway. Okay, so that's the reporting in the news, and I guess the bottom line is, wear your spurs next week, because the rate decision basically has been completely baked in. And it's pretty well a foregone conclusion that we will have the basis cut, maybe 25 points. Now they're bickering back and forth, 50 basis points or 25. Rate cut next week. And probably one more this year. The big unknown and the big question confronting the pundits now is what will happen next year. Market's never able to just get their shit together, and there's a lot of moving parts around that. So, and I'm going to try to not be as opinionated as I am here on the stream typically. So there we go. Again, my workflow is to keep the entire session in view and keep it about 1 point high. So I have a sense of scale and a sense of context. If you want to look at the statistics around the gap, come to think about it, that's doable right over here with our little statistics study. I forgot to mention, I think, the snap I do for the TLab, which I started years ago, is this. It shows, the current session and the RTH and ETH sessions back a few, all of the data to do with them, the naked volume points of control, and then all the numbers you could possibly imagine up here. And the reason for that is way back when I first went to the TLab, Tom didn't stream, and he basically commented and carried on for, like I do now with this stream, 4 or 5 hours a day. Active, ongoing thing. And I enjoyed that. And it was, then I moved on to the stream myself because of his suggestion, actually, to narrate. You should very definitely stay engaged with the market, narrate what you're going to do. If then this, if not, then what? And my way of continually narrating and keeping up the journal was and is this stream. Therefore, if I'm focused here and I'm focused on narrating the market and trading, I'm not busy typing and banging and putting, likes and dislikes and whatever else it is somewhere else. It means nothing about how I feel. It's just I'm trying to be serious about this and develop this is my business. This is not a video game. This is my business. And I approach it as such. Anyway, so if you, back to that story. So in the beginning, I realized that lots of people would suddenly post, what's the POC? What's POC? What's POC? What's POC? And all these questions. And I thought, well, here, I'll put together this one graph and chart and post it every day at 8:20 about, and then to answer everybody's questions. And that's how this evolved. And until somebody says that's stupid, stop doing it, I guess I will. Now, let's look at this and think about it analytically here. Higher out of range statistic. We all know the IB statistic. That says that after 9:30, remember the rules for the initial balance, there is no initial balance statistic until 9:30. Okay? Greater than 97.7% probability in all four open types, you see that are all higher than 97.7, will the IB high or low will be exceeded by price in the balance of the RTH trading session. In other words, after 9:30 and before 1600, the high or low will be exceeded by price. That's a statistic that I'm working with in vetting my trades. I'll talk about that later. But let's move down to the gap, which is where this was heading. What's the probability of a higher out of range opening? That's a gap up, isn't it? What's the probability that price will revisit or close the gap of the previous RTH high? Well, it's 65.4% of the time right there. So looking backwards over 2,000 days, gap up, probability to close the gap is 65.4% of the time. A lot can be gleaned if you stop and think about it from a simple study like this. Very important, I think, and meaningful, right? So there you go. How was that? Where am I now? Dip, 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 do. Make sure everybody's doing what they're supposed to do here. Seems like they are. And a quick note on my charts, if you see this expected move or a weekly expected move or whatever, which is up above and below, these are something, this is some information that I'm exploring, comes from the option world. These expected moves and the weekly expected moves are based on implied volatility for the inside at the money strikes. And it's a real big deal in the options world, as I understand it. And I know just about enough about options to be dangerous. So do not take this as any kind of, don't ever take this as financial advice. But very definitely anything I say about options, make damn sure you figure it out for yourself. But so I'm just trying to vet these lines, these levels, to see if they are meaningful or not. Well, you can see what happened on the gap up. We zoomed right up to this expected move. What as I understand this, the expected move is basically one standard deviation either side of the at the money strike or the underlying. For the option, and the underlying being the S&P or the E-mini, or actually it's the SPX, that means that typically that is the extreme of the expected move. And I don't know much more about the statistics than that. I just picked it up from, I find that I find Tom Sosnoff and some of a couple of the people, certainly not through the entire day with Tasty Trade or whatever it's called now, but they have a pretty good thing after the market closes called After the Market something or another with experts or whatever it is. And there's a couple of guys. Ilian Spivak is a really knowledgeable macroeconomic person. Chris Vecchio is pretty knowledgeable about data stuff. And I find Tom Sosnoff has a lot of interesting things to say. And you can't, how can you argue with, fantastic success? It's like arguing with Jim Simmons or, Ed Thorpe or Ray Dalio or somebody like that. How are you going to argue with phenomenal success? And so I try to learn from that. And they spend a lot of time talking about the expected moves, and I thought I'd try to track them. I just wanted to be clear about that, what they are and why they're on the chart, and the fact that I essentially don't know. Just something I'm looking at, always looking, right? And let me, at that juncture, say something about trading in general, and that's this stream, and nobody should ever, you should never listen to anybody that puts forward the theory that it's my way or the highway, and I very definitely do not. I try to point that out every day. Whatever works for you in trading is absolutely what you should do. Remember that this is my trading journal, and I share it openly. Hopefully it will help somebody. It will maybe be entertaining. Maybe somebody will think it's funny. Maybe somebody will think, oh, I can't, I love watching that dumbass over there on the risk neutral trading thing. Whatever. I obviously hope it's beneficial. And remember that it's my trading journal. So the purpose of me continually narrating here is that's the way I am able to add my thinking or some insight into my thinking to the stream. The video captures everything, absolutely and faithfully, but the only way I can add my trader thinking component is to continually narrate. Morning, Antonio. Bom dia, tudo bem. So there's that. And to be frank, I would love it if I were consistently profitable trading on some simple TopStep X kind of thing, that's basically just a real, I don't know, well, I'm not trying to reserve comment, but, a real basic trading platform with no indicators, no volume profile, no volume, no nothing. If I were able to trade successfully using that somehow, Jesus, what a pleasure, huh? Don't spend any money, don't have any of the expense of all of this stuff, and be great. And if you can do that, fantastic. And if you know how to do that, share it with us, Come drop it in the chat there. I have a Discord channel associated with this, but I don't really use it for much of anything, except now and then one or two of the people and I will have a live voice discussion, like a phone call, after hours or something. So that's always a possibility, and the Discord is there, so that's not a problem either. But yeah, share it. As Tom says, if nobody can predict the market. It's a random environment. The outcome of the next trade is 50-50. The market is binary. It only goes up and down. This is a statistical fact. Hey, but if you figure out how you can do that, you be sure and call me first, right? And don't tell anybody else. Thanks, man. Muito obrigado. That is a funny thing that you said there, Antonio. Actually, as you know, I am a lingual idiot, and I don't speak I don't consider myself and bilingual or multilingual in any way, other than my daughter says, "Dad, you're bilingual. You speak English and profanity." So I'm not sure whether that's whether that is a compliment or not. But anyway, but a lot of people have said, "Oh, your accent is really good," like Spanish and French and you here and with Portuguese. I don't know. I guess it must be just something to do with the ear, like, so I get the sound right. It's the vocabulary and the correct usage and grammar that I'm a donut. I love it though. And as I've said, I'm sure before, I so admire anybody that's multilingual in any degree. And I am so embarrassed by the fact that I'm not. And I am certainly not one of those Americans who takes great pride in not being multilingual. I have always been really embarrassed about it. And I've lived out of the country most of my life, so I've been in environments where had I been good at it, or I guess been properly motivated, I'm sure it's my fault. It's not anybody else's. I should be at least bi and probably trilingual or quad anyway. I've lived in French speaking, Portuguese speaking, and Spanish speaking places. I pretty much discounted Asia because the language and the nuances with the sounds are so foreign to my ears, and I didn't get there till later in life, and my hearing's not very good, that I never, like my wife and daughter are Vietnamese. Jesus Christ, I can't. And probably one of the worst is Thai for me. Yeah, that's exactly right. The problem I've got, Antonio, is I'm running out of runway. I'm on the final glide path of life here, so I'm running out of time to do that. And I'm trying to get, I'm trying to prioritize things. Like, it's more important to get the trading business up and profitable and supporting the family than to develop more of my language skills. But it would certainly be, it would really be one of those bucket list things for sure. Absolutely, for sure. Here we go, IB high. Interesting statistic. I don't know if you had joined yet or not, but on the with the gap fills, it's 64% of the time in the current environment. Looking back at my statistic study, that we fill the gap in a higher outer range environment. Yeah, I so admire people like yourself, that speak and read and do everything so well. I think it's much more common between Europeans, actually, to be multilingual, and it's so admirable to me. It would be also admirable to me if I were able to just make millions of dollars here in the first RTH one and then hit the gym. It would also be pretty cool. So we are not indicating in any way, shape, or form that we're particularly interested in closing that gap, which is kind of interesting or strange or something. So let's talk about the IB stats, which I think I already did. And approaching this as a business, trading as a business, consistently profitable, sustainable business rather than a video game or gambling. And what I'm doing to vet these trades in following along with the way I understand that process should work. to develop the trading as a business. First thing to recognize is that it is a random environment, which I've referred to a lot lately here, and I try to frequently. Remember, this is I'm talking to myself here, right? So, and I really believe that your subconscious mind, and it's been proven by Carl Jung and a lot of people, that your subconscious believes what you tell it, especially what you articulate and verbalize. So most of this is me trying to, brainwash myself, my subconscious. But anyway, I believe that it's basically a random environment, in that trying to predict where the market's going to go is, not a very good thing to do. You can anticipate where you might think it go, like we were talking about gap rules today. It doesn't look like we're going to close that gap, in any kind of urgency, and they're trading higher. So it's a random environment, and the outcome of the next trade is 50-50. The market can only go up or down. It's a binary event. We put time on it to give it horizontal movement, but it's just up or down. It's like a coin flip. So what you want to do to further this business idea is to identify a setup or a pattern and the qualifying parameters that seem to repeat on a frequent basis. And then you want to identify them and capture a statistically significant data set of that setup and those parameters. Hopefully a large enough data set to get outside the possibility of random distribution. Random distribution being, if you flip a coin 10 times, it's not surprising. Everybody knows a coin is 50-50. If you flip it 10 times, it's not a surprise to anyone that you might have 8 heads. That's random distribution. You can have 10 losses, 10 stops in a row. That's random distribution. Doesn't mean the strategy's wrong. Doesn't mean anything. It means those are the occurrences or the outcomes within a standard a random distribution. So you want to try to get away outside of that. If you flip a coin 1,000 times, you're going to be pretty close to 50-50. Same way with trading. So you want to look at the law of large numbers. Anyway, you've identified the setup, you've identified the parameters, you try to capture, say, 100 trades with those identical parameters and determine if you have a positive edge or expectancy or not. And if you do, then you want to take that trade and now with those setups every time they present themselves. And you rely on the law of large numbers to manifest that edge or that expectancy to your bank account. So you're never hanging on the next trade. You're looking at your sample set, over 1,000 trades or 100 trades. I can expect that I will get 75 T1. I will get another, whatever it is, 50 T2. I'll get so many scratches and I'll get so many stops. And those are the statistics that you need to rely on for trading. If you have 10 stops in a row or 5 stops in a row, you don't freak out and change everything. You look at the overall data set and you know that's, given my sample set and my statistics, that's within the parameters. So there's that. Okay, now for the here and now, I'm working on the IB failure and the IB continuation trades. I chose that because, first of all, the IB is, how can you miss the IB? It's like the VPOC migration. And second of all, it gives you 2 alternatives. It gives you 2 vetted trades. One is for a continuation or directional market, and one is for a mean reverting or a balancing market. The unfortunate part about this is, until this process is over, there's no other trades in the day that I take, and I cannot vary the parameters of that setup at all. I can't possibly have, T1 at 3 points today and 5 points tomorrow and 2 points the next trade. Then those examples or those occurrences are not part of the data set, and I can't use them for my statistics. So should I put on a trade here, as I have done in the past recently, I put the bracket on and stand back. I don't touch anything. Now, with the IB high or failure, typically it's suggested by a rotational market, right? Because it's a mean reversion trade. It's outside in. The IB continuation trade is the other way around. It's typically suspected to be the case in a directional market. And I'm having a couple of 3 problems here. Well, I've probably had a lot more than that, but lately I'll be expecting a rotational, a mean reversion or a IB failure. And in fact, the tanker has turned and it's heading into a directional day. I also have a range requirement, which I further employ or whatever, apply to this process. My goal is to get this to achieve a minimum amount of discretion. I really envy quants that can code up a whole trading system and it does it. There's no discretionary input. I cannot do that. So what I'm trying to do is minimize that, and that would be that I can recognize exactly when, which way I'm going to trade and what the specific setup is. Now, remember that the IB sets at 9:30. So I can remain zoomed out here to keep an eye on context. What is our context? So far today, it's up, right? Not much. Our range is only 44 to 62. So it's about 16, 18 handles in a gap up situation with a 64% probability looking back over 2,000 days that we close the gap. And it isn't much of a close, right? We're only talking about 44 to 36. We're talking about less than 8 handles here to close the gap. Doesn't look like they're very interested in it. They got down here as far as they got. Now they're trading it up again. And the overnight high, which is a statistic living just up here above us, is at 77%. We're closer to that than anywhere else. Anyhow, as far as the initial balance, it is, as I pointed out earlier, greater than 97.7% probability that we will close, that at some point in the balance of the RTH trading session, price will exceed the IB high or low. That's all it is. Now, there's 1 or 2 caveats that I think are important. Damn it. And that is, do not trade toward the statistic. I have learned extremely the hard way and have data to back this one up. What I mean by that is, oh boy, The IB setting in 5 minutes. We're above the VPOCs, the mid, the VWAPs, all this kind of stuff. We're going to take out the IB high, and you get long down here somewhere, trading toward the statistic. And then, of course, it immediately goes down and takes out the IB low. So wait for the statistic to be set, and then you can continue to, I can continue to vet or analyze, or whatever you want to call it, determine whether I'm going to apply any trade. Remember, there's 3 positions. There's long, there's short, and there's flat. Am I going to go for an IB continuation? Am I going to go for an IB failure? Am I not going to go? And right now, I mean, lately, unfortunately, not going to go has been the head and shoulders winner, and that's not good, because I think it's representative of, I'm very good at rationalization and stuff, so I'm easily convinced myself that I know what I'm doing, but I think it's paralysis by analysis, actually. So that's bad news. And we've got 4 minutes till the IB statistic is set. Oh, I don't know. Let's go along. Come on. That would be an interesting statistic to see how often. Well, I wish I could get this coding figured out so I could do these what if things. How often are we within 3 points, say, of one IB level and turn around and go the other way? That would be an interesting statistic to have. I don't think, let me think about this for a minute. You know, I hope I'm not misinterpreting this all these years. The IB statistic is clearly 97.7%, okay? And I typically believe that, or have always believed, that this statistic for the IB high, for example, was for yesterday's IB high. But that should say P, as it does previous high or previous low. There is no such thing here as previous IB high or low that I see. I gotta confirm that. Boy, that'll be, talk about egg on your face if I've been looking at that all wrong. I mean, because it's easy, it would be easy to imagine, or for me to believe, that in a higher out of range environment, am I on the right page? Yes, that there would be a 65.4% probability that we would take out the IB high. And we already know that there's a 97.7% probability to take out one or the other. And then only a 58, so it's about 50-50, close, that we would take out the IB low. Here's another question. I think that might be the case. But this raises a question for me. If it's 97% probability that we take out one or the other, why wouldn't the probability or the number of days of the IB low and the IB high added together equal the same amount? Ooh. I got to figure this all out. I got to think about that. I'm thinking then that these statistics that I put, which are way below us somewhere, for the previous IB high and low, might be wrong. That would be an epiphany if I have just discovered that. But hey, that's what this is about, right? It's growing and learning. So is it 65.5% that the previous IB high is taken out? Or is it 65.5% that this IB is taken out? Anybody got any thoughts about that? Throw it in the deal there. Chat or wherever. Well, and what would that do to my thinking? What would that do to my thinking here? Not really anything. What it would do is eliminate me putting those flags for yesterday's IBs. I'll drop that question into Static there and see if one of the wizards what their feedback is. So here we are, boys and girls. It's 9:32. The IB statistic has been set as of right now. Okay, now I need to run around and check everything here. I'm trading both. I got a 2-lot package. I have multi-trade enabled. Where did the other thing go? Multi-brackets, the correct package. This is just, it's like the pre-takeoff checklist here. You want to make sure you got fuel in the tank before you kick the tires and light the fires, baby. Two things that never are of absolutely no use to a pilot is altitude above you and fuel on the ground. And what? Boy, it's interesting, huh? We've had one VPOC migration here. And I can't really... I guess I can throw one in here. Way back when. Way back here in the boondocks at 8:41. Got a crazy Ivan going on here, but remember that this is only the full session. This has not been the RTH session. Hasn't done anything magical or mysterious here yet. As far as the VPOC goes, that's the brighter yellow one is the VPOC, and the for the RTH, and this more muted yellow is for the full session here. It's also interesting to note that there's like a 25% probability that neither IB high or low will be taken out. It is actually 26.6% probability that neither will be taken. And this week could just be a chop fest, as was yesterday until the close. And if you got into that closing thing, it was great, I guess. But not a trade that in my book, I guess, looking backwards, of course, rearview mirror is such a convenient spot. We need to figure out how to get paid for rearview mirror trading. The only way I've figured out how to do that is to be an internet influencer or a YouTube guru and get the pay from YouTube. But anyway, if you look at yesterday in the rearview mirror, starting at about there when we had that IB continuation trade at about during the noon hour-ish, 12:48, you got some swing out of it. What was that? It was say 16 to 34. Sure, yeah, that was more than enough for the risk neutral scale and the second target. In this kind of a choppy, rotational blender soupy kind of days that we've been having, I think in lead up to the Fed thing, I'm real conscious of the fact, this is probably a rationalization, but I'm real conscious of the fact that I'm not in this job. I'm not doing this to scratch. I'm not interested in putting on risk for the scratch. So if I don't see what I think is a reasonable continuation to the profit target, I don't think that's I don't think putting risk on is appropriate in that situation. And I think of this range requirement to a bigger level when I'm thinking about that. Yeah, you might have your range requirement to the risk neutral scale of 3 points unobstructed path. An obstruction being a previous line or huge liquidity or something. Then where are you going? My second target, my real, profit target, T2, after the risk neutral scale, is 48 ticks or 12 handles. So if I don't see some reasonable idea that I've got 12 handles in it, I'm hesitant to take that trade because I don't know what that is, but let's see what happens there. Move that over here. I don't know what it's going to do. Some NVIDIA driver updates, or I don't know. Anyway, because I'm in the process of vetting the trade. So this is not a situation where I'm trading normally. In other words, I could, once I had my risk neutral scale, then I can, trail my stop up to break even, or I can move my profit targets up to or down to a reasonable, price level, existing price level. Oh, come on, man. The hell is going on? Existing price level? I don't know what the hell the deal is here now. I probably shouldn't have done that. OBS Studio. I'll have to, I guess I'm going to just put this down and see what the hell I've done, what I've done to myself. If you know what I mean. If that makes sense. And it's also, I'm also very aware of the fact that that there's one trade left, and all 5 of these trades are in XFA, where I can be paid and, do payment requests, and the next stop after that is live trading. So I believe you should never trade your P&L. And I never looked at the dashboard to see where I am, and I would not have done so in this case. But there was a problem with the accounts. They didn't roll over properly. They closed a couple. TopStep had a bunch of trouble. And I had to go to there and show them that all these accounts were in good standing and all that. And I realized in doing so that I'm just one trade away from XFA, and meaning all 5 would be then in XFAs. And so I'm real conscious of that, and not trying to force it, not trying to be excited because of that, and, all those psychological things that happen. Your monkey mind stuff. All those monkey mind things. And the monkey mind is, my opinion, whether you believe in evolution or creation, either one, I think both agree that humans have been around for a couple thousand years, I think. So, and of course with evolution, a hell of a lot longer than that, and there is the fossil record to prove it, so I'm not sure how anybody can argue with that. But anyway, so we have developed a subconscious and a psyche of, that has evolved over the years and is really, really ingrained and important. It's how we survived. It's why we are here now. And those humanoids that didn't evolve that way ended up something else's lunch, right? So FOMO, fear, desire to be right, the aggressiveness, all that stuff is all part of our monkey mind from thousands of years of evolution, one way or the other, or, involvement. And you're never going to get rid of that. You're never going to, these guys in YouTube, you got to, eliminate FOMO from your psyche or whatever. That's bullshit. You're never going to do that. That's like eliminating your sex drive, I guess. Never going to happen. But what you need to do in trading, in my opinion, what I need to do, and I think I'm pretty good at so far, is recognize when those thoughts are happening, and when I'm being affected by that adrenaline rush or that fear or that FOMO or that whatever else. Just like, realizing that I'm one trade away from those being XFA, I have to realize that is influencing me to think, let's get this over with, let's make this trade, try to be more or less analytical about setups. You have to be aware of that and then not act on it. That's what I believe, the way I approach it. These guys that talk about, I just can't stop over trading. How do I stop over trading? I'm going to lock myself out. Jesus Christ, dude. Don't overtrade. Don't click the mouse 1,000 times. Be an adult. And maybe that's way too simplified, probably. But again, this is my journal, so, it's my story and I'm sticking to it. Here we are stuck in the middle again, huh? See how unprofitable trading to that statistic would have been? Here we are, we're above we've traded up, we've pulled back, we're right at this consolidation level where we had a V reversal. We're at the developing value area high, which is usually a bounce point or a reaction point. We're going to trade up here. You got long. Oops. You got stopped out. Yeah. Unfortunately happens a lot. Antonio's favorite trade, the VPOC migration, he can go back to sleep or go on and get some sun or something. Look at this thing here. So far, the first hour and change, hour and 15 minutes, and we had this little square dance going on down here, and then one VPOC migration up. Now, if you were Johnny on the spot and had that setup all figured out, and you took the VPOC migration based on the fact that you had a price check at aisle 3 pretty much close to down here, you got scaled up here, then you got stopped out over here. There you go. Now, if you are a mean reversion trader and you're good at that, and you realize that this is a balanced profile so far, and you saw this low and they tested down to this low here and you got long on the mean reversion, you got your targets, but this is strictly rearview mirror. And let's pretend right here, okay, now what are you going to do? This is the hard right edge. You're going to go long here, mean reverting back to here. And where are you going to go? Well, here's the mean. So if you're down here at 44, you got 49. That's 5 points. Okay. I can understand that. You got 1, 2, 3 levels in the road. Let's see the basic one, 44 to 46. Well, to these basic obstacles here, there is not the range requirement. Just saying. I'm not saying I have an answer to that other than don't overtrade. Make A plus, take, especially in this heightened, uncertain, we have a big component of unrecognized potential critical risk all the time. With the tariffs basically are surrounding, basically around the inconsistency and the random things that the administration, some in the administration are doing, with tweets and conversation and stuff like that. That's an unrealized risk. So unrecognized critical risk potential. So in my opinion, you need to limit your exposure to the market where you put on risk to your account to a minimum and to A plus setups. So I'm not going to put on a trade where I have maybe a scale potential to a big risk reversal area, which is a POC, when I need to get to 12 points, right? So if I put on a trade down here, 54, 56, I need to get all the way up here, which would be fine, to get my profit target. Meaning I've got to get across the VWAP, POC, the mid, and the open to get to my scale. And the overnight volume point of control to get to the scale. That's an awful lot of obstacles in the road. And by what I mean by obstacles are any of these lines or levels where price frequently reacts. Again, it's random. You don't know how it's going to react. Maybe it's going to sell off quickly right here. maybe it's going to go flying up from here. There are two separate reactions. 1, 2, 3, 4 separate reactions in that first 30 minutes where a price reacted differently, 180 degrees out of phase from the POC. I know this, it sounds like rationalization to me too. That's why I like to review these, but I think it's logical. Now we go. Okay, finally. And how did we know this was going to migrate? Because it is just the price at which the most contracts have traded. 72.78, the very split second that any one of these prices trades 72.79, this yellow boy is going to go zooming up there. That's simple. Here we were at 71.76, 72.78. That's less than 100. No, it's 102 contracts. More traded right here than right here, and that's what brought the POC up here after all this time. And you know, you don't need to be a wizard or a soothsayer or Edgar Casey Jr. to predict when that VPOC is going to migrate. It's just numbers, data, and math. Simple. Now, I guess I could hide these columns and then, you know, tweet that we're going to have a VPOC migration to some price level, and everybody would think I was pretty snazzy, I guess. See where Larry Ellison is overtaking Musk as the world's richest man. That's got to throw a wrinkle in Elon's ego. What a weird guy, Jesus. I spent quite a bit of time in sub-Saharan Africa, most of the 90s, actually. And the last couple of years was in South Africa. Boy, those Afrikaners are a different breed of cat. They make the American Southern racist people look like open-minded liberal. It's weird. Yeah, it's really weird. Okay, 10 o'clock. And now we've had that VPOC migration, and of course you got long, and now you're stopped out. I don't know how this one, Peter did a vetting and posted a thing about it in Static there, that he just takes them, bam. And he's got some sort of statistic around that. I went back and looked at the same number of trades, just scrolling back through the chart, and boy, I couldn't get the same results. Couldn't get the same results. Which is brings up a valid point about statistics and betting trades and all that. Always verify the numbers and statistics yourself. I mean, I just identified a potential thing I've been doing wrong for a long time here. If you were listening about the IBs and with regard to the statistics study in IRT, which I believe and I know from the looking at the code backwards as best I can, does a very accurate job of what it's doing. But in my case, I think I've been interpreting that wrong most of this time. I'm going to drop something in static after the dust clears here a bit and see what their reaction is. Rod and, Harry and Garrett, those guys. And we're down. Why? Because we went to 82.84. So we dropped down from 80.20 to 82.24. It's just bouncing back and forth by a couple hundred contracts. And you can do this all flipping day. Retail soup, boys and girls. Let's have a look over here, shall we? Ooh, what is it? Oh, well, we're pretty much okay for volume. We're near 100%. Yesterday, about this time, was like 64%. This is the volume traded, percentage volume traded to average for this same period of time over a look back. SPX is pretty tight. In our ATR, I mean, yeah, average true range is 4.75 handles today so far. You gonna come to life here, RT? Thank you so much. Okie dokie. I don't remember seeing a day where we didn't take either the IB high or low. That's why it's 97%. But there's a statistic, we have done so in this open type. Not much, obviously. We have a 26.6% probability that we take both. Okay? Now, unless I'm crazy, if the statistic is that 97.7% of the days we took one or the other, that means that there's a 2.3% probability that we take neither. So, if it's near the end of the day, power hour's winding down, and we're trading down here someplace, and you haven't taken either the IB high or low, might be a reasonable idea to take a short targeting the low, you know what I mean? Or targeting whichever one you're close to near the end of the day. And that would be completely contrary to what I was talking about earlier, where we don't trade towards a statistic. But that's a different scenario completely. I mean, think about it, 2.3% probability that we will finish the day without taking either one of these. And if that's not correct thinking, somebody tell me. Well. Ooh, boy, look at the crude draw. Holy moly. What a big build up in crude. 3.93 million contracts. The Cushing crude inventories dropped by 0.36 million. Oh. And the Atlanta Fed coming up here with the GDP now at noon. And what is Agent Orange up to here? The wholesale inventories were down. So we're going to have an intelligence briefing. That's kind of an oxymoron if I ever heard one, I think, isn't it? Okay. There's been some interviews with people who were involved in the previous administration 2 years ago, or time before last, the Trump one. Some pretty surprising revelations there about things to do with briefings and security briefings and stuff like that. Pretty interesting. And I can only imagine this go around is probably similar. The difference being the first go around, there were people in the government that were like guardrails, and now seem emboldened to remove any kind of checks and balances, which was the premise here for a long time. It seems to me. Okay, this is about as much fun as you can have with your clothes on here, isn't it? Jesus. Maybe not. I better go and roam around the house and see what kind of trouble I can get into. I'll be right back. I can say right at this moment that the current price action would suggest a mean reversion trade, because we don't seem to be extending the ranges in any direction or showing any motivation to close the gap. Now, there could be something come out of this news hootenanny that's coming up to disrupt the auction, but at the moment, what are we doing? We're in a pretty tight range of 62, 43, 20 handles. Got a big pile of liquidity living down here at 47, 46. Look at that. Been in the market a long time. Is this a magnet? Or is this a floor? Question I have every day with liquidity like that. My point was going to be that I would be pretty hard pressed should we take out the IB low, because we're down here now. I would be extremely hard pressed to try to take a mean reversion trade. Developing value very low, huge volume, Globe X VWAP, and then here's the mean. So 44 to 50, that's, 52, 8 handles. So that's not conducive, in my opinion, that's not risk worthy, shall we say.
Pásame blon, me quita el sufrimiento. Me liberé de las ganas, humo en el viento.
And, you know, we could drop through the bottom and then just close the gap and who knows what. It's a random market and the outcome is 50-50. And something that I need to do is eat my own dog food and know that fully expect 50-50. But I'm trying to maximize the skew in my favor, or the expectancy to my favor. And this is not the market to be doing that.
Mucha suerte con todas sin bote, un payaso sin trucos y chistes, un bufón sin las putas canciones, con tu la 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 la, la 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 la. Ese tema que me sigues, no me sigue, maná. Tanta ira no me reconocí, cuántas canciones escribo para ti, melodías que compuse ya no sirven más aquí. Ya rompí las cadenas del amor, el hechizo que pusiste en movimiento. Oye, cabrón, pa' ser blanc, que prefiero olvidarlo. Tu maldición, baby. Me liberé del hechizo que tenía sobre mí. Me liberé del control que tenía sobre mí. Me liberé del hechizo que tenía sobre mí.
Man, I'm standing here talking to a damn mute thing. Son of a gun. Yeah, so I have not reacting here. I am not comfortable with that idea. I realize that's discretionary. Buyers didn't get paid. Test back up. Arguably, depending on how good you were with your entry, you got risk neutral scale. From here, not from here, not from here. And what are we going to do now? Oop. This is kind of a rehash of what I just got through talking about. And we've got the news up here in 7 minutes or 6 minutes, or potential risk. The Agent Orange and the random risk band taking the stage. Amazing, isn't it, that there can be such uncertainty around the office of the President of the United States. That's pretty weird to me. I'm an old guy that was raised over here, so I would have never expected that. And maybe other presidents have been as crazy or more, but they weren't so reality TV focused, you know, tweeting, policy by tweet and stuff. It's just the weirdest evolution of the whole thing to me. I'm sure others have been wackadoodle too, but I guess there's, you know, ignorance is bliss. I guess we just didn't know. Maybe. Well, I'm not too uncomfortable about not having taken this IB continuation. I would not be interested in an IB failure, as I pointed out early on. I think it was unmuted. I don't know. Because look at the range, look at the day, and look at the levels. Where are you going? Now, didn't seem too anxious to want to close that gap, which is right here. This previous all-time high seems to be a pretty heavy line in the sand. We got some liquidity now. We've got 252 here at 44 or 43. Yeah, 44. And again, the question is that a lid on the pot, or is that a magnet? And he could come up and say something, and this market could go through the roof or could fall out of bed. That's the problem with that. That's the whole problem with that unknown, unidentifiable critical risk. If you're in any profession, whether it's in any profession, specifically project management, after you've gotten the project identified and resources assigned, etc., the first thing you do is a risk management plan. You identify any risks to the project, and you try to, and you rank them, and you work out a mitigation plan for them. And an unknown, unquantifiable, random risk is the biggest problem that you worry about. And now, if you got short and you're all warm and fuzzy about that, you're hoping to Christ it doesn't get through these levels right here and get to your stop. And I am not. Pretty near Tom time there, Antonio. If you're not over there already. So we'll take a little run around the roses here while we watch this hootenanny go off. Here we are. Here's the higher time frame micro composite. Boop. Here's our gap up today. And so we'll have a new, depending on what happens, we'll have a new, could have a new micro composite as we did here. That's how I do it. Here we are. This is the market profile chart. Pretty easy to see. This big yellow line is where trade is now. And here we are on the Renko. This is the ES Mini and the NQ Mini, by the way. I am, baby girl. Ooh, the boss just went smoothing by and was telling me lies about food. Oh yeah, here we go. Well, aren't I clever? Not at all, but you know, point. Anyway, how are we with volumes, etc.? Yeah, about 100% on at this time of day. And our ATR is still holding around 4.5. The ATR, I wouldn't say ours. It's not, certainly not mine. And now we may fall right out of bed over here. You never know. You know, bumped their head on the top of the bed and couldn't get up in the morning, and down we went. Or not. But I can safely say that if you were short anywhere down here at 43.5, you're pretty disappointed about life right here. You're praying to whomever it is you do that to that that you're still in this trade and not stopped. This would be, let me rephrase that, this would be a mean reversion trigger right here. We've taken this statistic, we've done a bunch of trading down here and didn't get anywhere. We've come back up through it, we've traded down to it, and now we've come up. Oh, wait a minute, what else happened? Oh, well, we went over here. I can assure you that this is related to something that was said starting at 9:30 or 10:30. And I'm not going to be upset at all about staying away from this stuff. So you're likely stopped out here. You're not getting paid here. You haven't been scaled here. Now, you get long here. You didn't get, or did you? 43.75, depending how quick you are. You could be scaled, you could be not up here. But you're very definitely borderline stopped right here. Now you use your imagination. See this big line of support right here? I draw a line, but I'm afraid I'm going to enter some trade wrong. I've done that frequently. That's why I didn't ever used to use the mouse in the active data column. I would forever. You see how it changes to a $sign? That means anywhere you click over here, you've got an order on one way or another, whether you wanted to or not, or a trade. I do believe trading with your mouse on Bookmap is the most efficient and precise way to do it. So that's why I'm trying, but I'm leery of drawing lines and boxes. I wish I could highlight this zone, that line, but I can't make it different, or I don't know how. So here's a bunch of support. Are we going to break through it and trade lower to close the gap? Do we care about the gap? Or are we going to go back up? Now, if you got short up here, you're thinking you're a freaking wizard, right? Now we're going to trade down and close the gap from the looks of it. And Agent Orange is on duty, so I'm going to... This good-looking gal over here. And so, look at this. Here's what caused that bump in the market. Yes, coming. Here's what caused the bump in the market. What's with Russia violating Poland's airspace? And the market does this. Really? Now, this is crude oil, okay? Jesus, criminy Christ, you know? I don't know. I just... It's random risk and I'm staying away. Now I'm upset that I didn't get short on this test. What? I'm sure, of course I am. It's 43.5 and we're down here at 41. That's only 2 points. We got to get to 40.5, which did we? Yeah, now we're scaled. And where are we going? We're going to close the gap. Okay, and I'm going to go close my mouth around some food.
pienso en qué pasó y cómo me afectó las horas que pasé en aquel bus. No entiendo bien por qué mi abuelo distraído se bajó sin mí. Yo seguí. Acapulco no era un lugar para una niña de mi edad. Con solo 4 años enfrenté la soledad. Del bus te vi pasar y la calle caminar, y a pesar del miedo que me dio, no pude ni llorar. Eres la niña perdida, el chico me preguntó. No había entendido que esa niña era yo. Después de 6 horas encontré donde bajar, crucé la calle, di con el lugar, se abrió la puerta y todo mi mundo me abrazó. Estaba sola frente al mar. Nunca me voy a olvidar. Estaba sola frente al mar. Acapulco era el lugar.
Well, so much for the close the gap in the IB low, huh? as usual, my wife is just a phenomenal partner and cook and mother and homemaker and everything else. And my waistline can attest to that. So I'm not sure whether this is a result of yeah, probably the press story that's happening.
Deixa de preguiça, deixa o cobertor. Deixa que hoje eu vou ser o teu calor. Sei que tá friozinho, já sei como é. Sei que o nosso amor aquece quando quer. De manhãzinho o sol nasceu. Deu esperança de beijinhos. Não espere tanto, tanto tenho a dar pra fazer o frio evaporar. Deixa de preguiça, deixa o cobertor. Deixa que hoje eu vou ser o seu calor. Sei que tá friozinho, já sei como é. Sei que o nosso amor aquece quando quer. De manhãzinho o sol nasceu. Deu esperança de beijinhos. Não espere tanto, tanto tenho a dar pra fazer o frio evaporar. Deixa de preguiça, deixa o cobertor. Deixa que hoje eu vou ser o teu calor. Sei que tá friozinho, já sei como é. Sei que o nosso amor aquece quando quer. De manhãzinho o sol nasceu. Deu esperança de beijinhos. Não espere tanto, salgo a caminar al sol por nuestro lago y por donde mire te veo en todos lados. Tantos recuerdos, cuánto hemos pasado. Ay, amiga, cómo te extraño. Ay, amiga, te extraño. En nuestro universo todo era posible. Cantamos, reímos, bailamos y lloramos. Nuestra amistad nos hacía invencibles. Siento tu presencia
Muitas vezes é da dor que vem o amor. Eu que pensava que era um engano. Olho seus olhos de luz e vejo um anjo. Esqueci dos tropeços, esqueci das caídas, em noites perdidas vou encontrar o meu lar. Foi do seu sorriso que encontrei a paz, alguém que preciso pra não olhar mais pra trás. Foi do seu sorriso que encontrei a paz, alguém que preciso pra não olhar mais pra trás.
Ay, amor, te quiero dar mis días, también darte mis noches llenas de amor. Corazón, hablarle en poesía, cantarle a tu alma y llenarla de ilusión. Amor, te quiero dar amor cuando sientas dolor. Quiero acompañarte hasta que te salga el sol. Besar todas tus lágrimas y darte todo mi amor. Ay, amor, jamás seré tu dueña. Yo quiero que me elijas cada día por amor. Corazón, todo lo que he vivido fue para prepararme y reconocer tu amor. Amor, te quiero dar amor cuando sientas dolor. Quiero acompañarte hasta que te salga el sol. Besar todas tus lágrimas y darte todo mi amor. al sol, besar todas tus lágrimas y darte todo mi amor.
Well, let's see here now. That's been a whole lot of nothing. Haven't closed the gap yet, but they're still toying with that. I would suggest that this is a really good time to be at the gym or doing pretty much anything except putting on risk. Looks like they're going to close the gap here. Neither of my trade, well, I guess I could have said the IV failure trade up here. Nope, that was not correct because it's not the IB. Never mind. I was going to say the IB failure trade, but that's not it. Is what's going on here? 1141. Still talking. So I'm not going to have anything to do with that. I would recommend that if the weather's good wherever you are, or you need to go to the gym or do something, it's a really good day to do that. You need to stop and think about, well, let me start over here. I'm trying to get my act together here. So, important to remember that reward, oh, damn it, is not equal to effort when it comes to trading. What do I mean by that? Well, I don't know, where or however you were brought up, but typically we raise thinking that your reward is equal to the effort that you put out, work ethic, day's work for a day's pay, and all that kind of thing. That's not the case, even remotely, when it comes to trading. Trading is basically nearly the opposite. If you stock and pre-identify and stock an A+ setup with a risk reward that is in your favor, risk 1 to make 3, for example, then the fewer times you put that on, the less exposure you have in the market, and take those A+ risk reward scenarios, the much better off you are than somebody that's, thinking they're a scalper or clicking the mouse like they're killing snakes or whatever else. So that's, remember, of course, that this is my journal, and essentially I am talking to myself here. But that's exactly something that I know to be the case. And it's not the case in a lot of things. However, I did learn after years that you make more money with your brain than you do with your back. And that's a pretty stark but real realization, especially coming from an environment and a background like I did, where it's essentially exactly the opposite. I grew up
on a cattle and horse ranch in Montana. My mom, my dad, and I ran the ranch, did all the work. Definitely, reward was equal to effort, you know? But that's not the case in the majority of the time. And if you look at this profile now, is that about the most evenly balanced mean reversion rotational profile? You bet. We've almost closed the gap, not quite. So that gap percentage at 64.5% looks like it's going to come to fruition. And if you were not busy trying to vet an IB trade, as I am, and you took this, double top or whatever you want to call this thing up here where they couldn't get anywhere, and you went short looking for that gap close, you're happier as a pig in the mud. But how much risk did you take? None so far from here. So good for you. That's not what I'm doing now. I'm vetting the IB trades, which I've talked about ad nauseum here. Go back in the stream and look at the timestamps and you can hear all about it. This is the situation that I'm in now, and this is the market that we're dealing with. Again, this is a blackout week for the Fed. The entire market and probably a large portion of the world is looking to what the Fed is going to do on the 17th, which is the rate decision. Also, Friday is the triple witching. It used to be quad witching, still is in Europe, but I think it's the individual stock options. I don't know, one of the options that they don't do in the States anymore that they used to do. So now there's no such thing as a quad witching, but in fact it's a triple witching 3 times a year. And this is one of those months. We did put in a new all-time high in the overnight, and we have not been able to get there yet in the regular trading session. This is the high for the regular trading session, so we're going to get back to one of those leapfrog deals. My suggestion is to get outside and do something for your health. Go exercise, go run around the block, rest your eyes, do some back testing, keep your eye on the markets. But this is not an opportunity-rich environment to put risk on, in my opinion. Take a quick run around the roses here. What have we got balance-wise? Well, we're almost up to full average volume. We've dropped off about a point in the ATR. Now down to 3 1/4. We were up as high as 6, almost 7 points. We have a wait a minute, let's see what's going on here. News-wise, we still have Fed makes no bids for the 10-year notes. Well, wow. It's a real dangerous game we're playing, I think, but nobody's asking my opinion, so there you go. There's no news. I would say that Trump is still doing his briefing, and that risk still exists to the market, to the auction. It could be nothing, could be a lot. You know, it shouldn't come as a surprise to you that there is a risk there that they can say or tweet something that has a huge impact on the market. We've had our mean reversion, haven't closed the gap, pretty damn close. What are we going to do now? Come back the other way? Don't know. So here we have the market profile. There's the gap. Here's the micro composite. Simply RTH session, daily candlesticks, wherever the price overlaps, I draw a volume profile around it. The way I have the profile set up, I get a high and low volume nodes, which push automatically to Bookmap. And I get a micro composite VPOC, which I enter manually in Bookmap. And this is the E-mini, just about as rotational as you want to get. NASDAQ, same story. Volume is 0.32% positive change on the minis. Volume is as expected. And here we are. This is the my workflow now, or includes this visual reference, which I put here at the start of every session. It's just a blue vertical line. But that way I can just glance left. If I see this line, I know I've got the entire session in view. I try to keep it wound down to about 1 point high. Going the wrong way, sorry about that. About 1 point high. This is each one of these price steps is 1 point. And there's the day right there. There's the IB high at 62 and the RTH low at 37. Fairly tight range. About as balanced and rotational as you're going to get. With the POC, the Globex VWAP, the RTH VWAP, the mid, and the full session POC all right stacked on top of each other, right here, at 49. We've had very little VPOC dancing around or movement, and now we're going to rotate back up again. So I'm going to take advantage of getting something else done around here, and I'll grab some midday break and be back in a bit. My advice is to enjoy the market, or more importantly, perhaps better off all the way around, you go out and do something for yourself. Rest your eyes, do some back testing if you want to continue on market stuff. Go to the gym, you know. This is, you need to assess the probability of success, putting risk on every day in what kind of a market. In other words, is it worth it? There are guys, I can promise you, that have blown up their accounts today, just being chopped to death. Risk, I call this they're making retail soup, because they cannot seem to control themselves for clicking the mouse or trying to call the tops or pick the bottoms or, you know, whatever else it is. So I don't want to be one of those guys. One of those traders, I should say, not guys. I'm sure that there's an equal, probably better group of female lady traders. Look at this, 505. That's quite a bit of liquidity sitting there at 47, huh? They're taking a pretty big stand on this one. It's got to be some cajoling around the options world, I guess. 47, pretty substantial. Okay. All right, so I'm going to step away here. I've had a little dialogue with the boys over there at Static. We've been around the horn here. We're now rotating right back up again. You know, if you're a mean reversion trader completely and you have vetted that trade, know that you have a statistical edge or expectancy or whatever over a large enough data set that's outside random distribution, then good for you. There's your mean reversion. Down to here. Here's a mean reversion back to there. Here's a mean reversion. Here's one back up again. I'm not doing that now. Yeah, there we go. They finally got the gap closed, huh? Okay. Now what are they going to do? And just, eh? So our 64% probability came to pass. Amazing how there's so frequently the statistics bear out. Okie dokie. Okay. Now what? It's so bizarre to me. As I was saying earlier, do these people not know what they're talking about? Apparently, America is the largest exporter of oil and liquid natural gas in the world. And where does that go? UK and Europe. And that was a fact from well in the Biden administration. This is just complete ridiculous rhetoric to try to bolster some position of Trump, I guess, because it's not the truth. I mean, look it up. Don't believe me, whatever you do, look it up. It's truly amazing. But, it's very possible that whoever this person is, doesn't know. Maybe. But that would be my guess, that they don't know what they're talking about. Well, they closed the gap here, so that's nice. Don't look like they're too excited to keep it closed, though. The idea with the gap rules is that if the gap is closed relatively early in the session, which it was not, but if it is, and or if price then trades down into value and is accepted or accepted in range, then the high probability they'll trade across the previous day's range and value maybe. And if it's rejected out of it, then they'll trade back the other direction, in the direction of the gap. So what are they going to do here? I don't know. Easier to see over here, I guess. There's the gap high. Close the gap finally. Will we be accepted in range and then into value? If we're accepted in value, high probability to trade across value. If we're rejected back out, high probability to trade back around this distribution the other direction, the upside. None of which has anything to do with my vetting of the IB trade. In hindsight, of course, you can, which is always so clear, the rearview mirror concept. There's this test of the IB low and then an IB continuation, not to the full, just barely to 8 points. But certainly not to, and what's different in that in here, or here. Or here, when it's the hard right edge, let's see, where am I here? Okay, when it's the hard right edge, Are we going to trade down? Looks good. Oh, wait. Are we going to trade down again? Are we going to trade down there? So easy in the rearview mirror. We need to get paid those rearview mirror bucks, I guess. We enter the world famous power hour in about 14 minutes. And then $47. What happened at 47? Long gone. There was that 500, 600 contracts that did 47 once upon a time today. Previous close, the old overnight low and settlement down here at 21. NASDAQ is looking lower. Yeah, these days are boring. More boring for me than for stream, I'm sure. Got to be on constant vigil, though, not to succumb to that. You know, trading out of boredom, FOMO, frustration. Those are disasters waiting to happen. Disasters waiting to happen. It's important to point out here that my version of a gap, here's the gap high, and there's the gap low. My view on the gap is range. So from the close or the high of yesterday till the open today is the gap. Some people do it other ways, and one way being the close, which is down here. The close is actually lower than the high of yesterday, and we just touched that close. So we just basically touched closing the gap, depending on how you want to look at it. I think range makes sense, where a gap, in my opinion, is where we didn't trade anything. Low or high. Oh, my tape maker. Sorry about that. Yes, your screenless. What can I help you with? Mean it. Okay, here we go. Now they're going to go down, huh? Yeah, the NQ's leading the way. Let's see if they close, if they are accepted in value and trade across it. That would be pretty interesting. Right now, I got to fix some food for my daughter before she goes to college. now I'll unmute this. Look at the price here. And then look over here at the Rinkos. That looks like a double bottom, doesn't it? When you look at Rinkos. Not so much over here. I guess you could call this that. This is what it's looking at. I guess. And we are officially in the world famous power hour with 45 minutes or 44 minutes left in the trading session. I start the stream every morning at 0800 and it lasts until 1500, which is another 45 minutes with the complete cash session after that point. I do that to ensure transparency and accountability here. They notice that the monitors are shared, not just the application, so you can see all of the any application that's open down here, and the time and the date to the second. There'd be no problems. And of course the time here ties up with the time over here in Bookmap. Okay. Well, let's see. In hindsight, boy, was that a clear IB continuation. Obviously, as I pointed out earlier, I didn't see it, nor would I, because of the wonderful things it does. Simply just, I'm not really looking at that point in time. But after about noon, I'm thinking, pretty dicey what they're going to do. I find it hard to say this correctly. I find it hard to favorably anticipate an IB continuation trade, for example, at, past 12, past the noon period. And that's clearly one. But was this one? Was this one? This is the advantage of rear-view mirror trading. Was this one? Down, back up, down, back up, down, back up, down, back up. Any of those couldn't qualify. On the hard right edge, they all look exactly the same as this. That's the joy of trading. Wow, the ES or NQ is really coming off. NQ fell out of bed hard here. They're not real pleased about the developments, I guess, and they are going to satisfy the gap rules from the looks of it, which is they closed the gap pretty early in the session here, and they were accepted in price and value, and looks like they're about ready to trade across value. That's essentially the definition of the gap rules. Not so much the case over here with the ES. Only closed the gap lately and haven't been accepted down here in value yet. So, oh boy, oh boy. Now they're getting some traction to the downside. Wow. Listen to me. Listen to this and look. I just get a thing from Wells Fargo about a new scam alert. Now what you come up with is you come to a website, you know how that you're using that application thing, you click to see if you're a human or whatever else it is. Well, they got it down to settlement. Pretty close. That's pretty good. And we have officially rounded the corner here for the final hurrah. Okay, let's take a quick run through the roses and see what we've got up our sleeves here now. For the daily recap. News-wise, my two news sources are investing.com, which is my oldest, and I find it easier and nicer to view just the report for what's going on. Tomorrow we've got quite a few biggies. We've got the core CPI, initial jobless claims. These are all at 7:30 in the morning. There's no real earnings to worry about. Adobe and Kroger. This week on tap, we have the biggies here, and then Friday, essentially, we've got the Michigan numbers, and that's about the big one for for Friday. But tomorrow is going to be the core CPI over the top of PMI today, or PPI today, I'm sorry. Producer Price Index, and this is the CPI's Consumer Price Index. All right, so that's investing.com, and it is free. The other source I use is Financial Juice, simply because it has a similar function of the docket right over here, but it's not that I keep getting phone calls. I don't recognize the numbers. It's not that handy, except it does have a sort of a squawk box feature here where you get updates through the day. Also free. You can pay for both if you choose to. We've had a big sell-off here. We had a big selling tail on this. Got down as low as we could, and now we're back up here to and we got into value and closed the gap. That's as far. We didn't get into value. Closed the gap as far as we could get. NQ got almost across value. Well, they did. They got it right down there to completely satisfied the gap rules. They closed the gap early on in the session, and they were accepted in value, and they traded it across and to get this over here and traded it right down to value area low. So they satisfied the gap rules to the T. This is the micro composite, where we will have a RTH session, daily candlesticks, draw a volume profile around overlapping prices. We get the high volume nodes in the micro composite VPOC. And this is market profile. Our balance, or we're about 108% volume now, so they're picking up in the closing moments. The range is expanded to about 5%, 5 handles on the ATR. And that brings us to Bookmap. There's our open. There we close the gap. Down to settlement, back up. We're going to have the market on close orders in about 10 minutes. Market on close and balance orders in about 10 minutes. And I'll see what's going on here. I'm being paged. All right, so here we are, all dressed up, no place to go. Okay, so what's happening now? We're going to have that market on close guy here in about 6 minutes. And that's been so insignificant lately. I haven't even, they have come and gone and I have been talking and haven't noticed them. Bouncing right off of that. In the case of the oh, I'm so glad. These are pretty terrible days, boy. I'm really over this. And you see, we had a little bit of a pop here, but not much. I'm busy trying to find something. Sorry about that. And we have 1.350 million buy-side S&Ps, 847 million buy-side NASDAQ, 436 buy-side Dow, and 440 million buy-side Mag 7. Now I'm going to get back to what I was trying to find. I can't find an important email that I needed to act on here. And I don't know why. That would be, might have deleted it by accident off my phone, maybe? I don't know. Pretty weird. And back out we go, back into the gap. So the ES was not accepted in the gap. The NQ remains so. I bet I know what happened. Okay. Well, that's pretty weird. Okay, we got about 15 seconds here, or, oh, I'm sorry. Yeah, 15 seconds, 10 seconds. We got the liquidity piling in on both sides. I'm going to be, look at us go. 600, 500, look at those. Look at those volumes piling up here on the liquidity. And there is our typical 1500 VPOC migration. And isn't that exciting? There we are. So that was a day, as far as I'm concerned. Have a great night. I'll be back at 8 o'clock in the morning for the pre-market and another fun-filled 7 hours of session here. Do something good for yourself. Get out and get some, exercise. Do something for your family. Remember that it is as if not more important to be healthy, firing on all 8 cylinders, however many you've got, not on tilt or emotionally upset. That's as if not more important than how many monitors you have or all that other stuff that we worry so much about, what charting package you're using, etc. So have a great night, and I'll see you tomorrow.